Are missing estimates. On what basis are they falling foul at this stage?
I think if we have a look at Nufarm's result, it has come in line with the company's own guidance, but really what has disappointed here is the dividend. Dividend of 3 cents compared to a lot of investment houses which were expecting 11 cents. And if we have a look at Nufarm, this is a company that's in the business of crop protection, herbicides, pesticides, fungicides, and Australasia makes up around about 50% of EBIT. We did see quite a dry season and a late season in WA, and usually that has a negative implication for crop protection. And if we have a look at Australasia, the EBIT was looking quite flat there. In terms of the US, we did see a good start to the season, but then of course we saw the season running into a drought. Altogether though, the North American EBIT looking quite good. We saw a doubling in underlying EBIT, so a strong result there. And if we have a look at South America, the growth there really has been driven by a strong result coming through from Brazil. We have seen some one-off charges, and that's related to a class action, and that's a $48.2 million charge. But really in terms of Nufarm's business, what we have seen in the last few years is the company trying to diversify its products to really fill that gap that's been felt by that fall that we've seen in glyphosate products. But altogether, the result in line with expectations, but the dividend disappointing, so we could see some downward pressure on the shares today.
HP, Julia, back on you. Ditching a contract with NRW Holdings in the Pilbara. Now, the significance of this one, because it would seem to be pretty ugly.
So it does look like a double punch for NRW, which is a mining services contractor. If we have a look at NRW, a few weeks ago we heard of the Fortescue impact on its business, and that there would be a $100 million fallout in their order book, which fell from an expectation of $1.3 billion for FY13 to $1.2 billion. We also saw the active pipeline tender as well as framework dropping quite substantially because of Fortescue's announcement as well. And today we've heard from BHP, it does look like they're going to adjust some of their contracts, and this is relating to Nelson Point in Inner Harbour in the Pilbara region. So it does look like there could be about a $75 to an $80 million impact from this. No impact in terms of full year earnings forecasts. NRW is still forecasting 15% growth, but it just shows how vulnerable these mining contractors are. A couple of weeks ago we heard of this announcement, an announcement due to Fortescue and the impact on the business. Of course, BHP is another key client, so it does look like NRW may come under a bit of pressure on some concerns that we are seeing that capital expenditure by those mining companies really impacting on those mining service companies.
Just a clarification there, as you were saying that the forecast still a 15% growth. My understanding was they'd yet to comment on the financial impact, or at least to determine it. Are you saying you've heard otherwise and that they're brushing that one off and still sticking to that 15% call?
In the announcement today by the company, that they have said that at the moment they don't really see an impact in terms of the full year guidance that's maintained with the guidance that they indicated earlier September, which was for 15% growth. But of course that 15% growth for FY13 has been adjusted. Previously the company had been forecasting 15 to 20% growth. That was revised on the 6th of September, and we are seeing the company sticking to that forecast for the time being. They are estimating about $75 to $80 million in terms of impact, but that has yet to be finalised. So these are all estimations for the time being, but I think the market's a little bit nervous in terms of the potential capital expenditure cliff coming through from the miners, especially after FY14. So we could see a bit of downward pressure on NRW's share price.
Now, I think it's an extra statement, so we'll try and get into that one, but that might give some further clues. Just maybe even while we check that, guys. Julia, what else are you eyeing today in terms of stock-specific news across the Australian market?
Well, for the month of September, I think it's been a very good month for the materials space. We've seen an increase of 9.5% for the materials space, and really that's been on the back of that quantitative easing announcement out of the US and really some position adjusting for that. But what we are seeing now is more concern around China growth, and I think that's going to continue to be a focus of the market. We're also watching Europe quite closely, and there are expectations that we will hear Spain asking for help, asking for a bailout, and that would be seen as a positive for markets. But the other thing to watch today is the HIA new home sales numbers for the month of August. Now, this is watched quite closely by overseas investors because there is quite a bit of concern around the Australian housing market. Of course, in the month of July, we saw a negative 5.6% result in these numbers, so they could shed some light on that housing industry. And we know that the residential construction industry has been under a fair bit of pressure, and some of those stocks on the ASX have been negatively impacted by that. Last week, the gold companies, the copper companies did well. We saw 52-week highs for the likes of Regis Resources as well as Codeco. If we have a look at the leads for commodities on Friday, we did see gold up by 0.4%, but a little bit of profit taking happening in Asia at the moment, and copper prices, they were down by 0.7%. So altogether, it does look like the miners are going to come under pressure, while for September so far, we have seen the miners well supported by the QE trade. But I think now what we are seeing is a bit of a shift and more of a focus on China and the growth story.
Some final thoughts, Julia, just more broadly today, you know, as the chatter grows ever louder for rate cuts as soon as next week, that retail sector, are you seeing perhaps some emerging opportunities at these levels? Because, I mean, in line with that, people are making some bold calls on house prices today popping. So the pass-through could be quite telling, could it not?
We have seen retailers under a fair bit of pressure. We've already seen quite a few rate cuts now. We saw them rate cuts in November, December last year, and then of course we saw May and June 75 basis points worth of cuts. And we are still seeing the retailers coming under pressure. David Jones, Myer coming under pressure. But of course we've seen a little bit of divergence from some of those specialty retailers which have been doing relatively well. We heard from Premier last week, and the Smiggles as well as the Peter Alexander brands were a standout there. So it does look like a bit of a divergence in the retailers and how they're performing. Of course, another rate cut is usually positive for that area of the market, which has been struggling with both cyclical as well as structural issues. We have a look at rate cut expectations. They have been quite volatile, and they have been fluctuating quite a bit between about a 25% probability to a 75% probability of a rate cut next week when the RBA meets. So we'll be watching that one closely. But of course, most economists do agree that we are in for a rate cut. It's just a matter of whether we are going to see it in October or November.